Hello, everybody. So today I want to try to talk about my thesis in MicroStrategy quickly. So MicroStrategy is an asset that has performed outstandingly this year. If you look at the past 4 years, it's up 101%. If you actually verify Michael Saylor's information, right? Don't trust, verify, as the Bitcoin ethos. When I look at when they implemented their strategy shortly after and look at the performance until today, I get 99%. Nvidia over the same period was 88%. In my view, this stock has done better than Nvidia. Of course, it depends on the period that you look at, but roughly a top performer like few of us have ever seen, I don't think. Why Bitcoin? So MicroStrategy is a Bitcoin proxy. To understand a Bitcoin proxy, we have to understand Bitcoin. What is the value proposition of Bitcoin? Value proposition is digital gold. It is digital gold. And one of the important points is that the supply of new Bitcoin mined, the new supply of Bitcoin added to the existing pie right now is right at about 1.7, 1.68% if you listen to ChatGPT, roughly depending on the time of the year you look at. So we only get 1.7% new Bitcoin each year, and that is key to understand that inflation rate. Why is it better than gold? Well, my biological knowledge of books on gold tells me the new supply of gold is about new 2 to 3%. 2 to 3% more gold is mined out of the ground each year. That's more than Bitcoin. ChatGPT thinks it's 1.5%. I think it's a little higher than that. What about dollars? How many new dollars do we get printed each year? Well, per my estimate, we get about 15% more dollars printed each year. Do not forget that whenever people talk about the money stock and how many dollars are there out there, they talk about M2 money stock. M2 money stock only includes dollars in the financial US system. It doesn't include dollars that are held abroad in the foreign dollarized financial system. We don't know how many new dollars are getting printed, but we know that in 2020 it was well over 40% in no time. I believe we're going to get back into a phase of intense monetary printing. I believe going forward, the new dollar issuance, the rate of new dollars will be about 15% a year. Now, to sum up, we have about 1.7% more Bitcoin out there each year, about 2 to 3% more gold out there, but it's impossible to know for sure because there is no ledger, there is no clear record, and we have about 15% more dollars out there each year. That is also impossible to know for sure because it is a very opaque system, especially outside of the US financial system. We don't know how many dollars there are. We don't know how much more gold there is, but we know how many Bitcoin there is. Everything we know and love, including our time, not only the value of our houses, of our cars, of our food, but also the value of our time, our labor, everything is divided by money. Money is simply the hardest, most fungible asset out there. Make no mistake. The dollar used to be gold. As we all know, the dollar used to be gold. This was a $100 bill, and you can see redeemable in gold on demand. The dollar used to be gold, but of course, ever since Roosevelt, it is not the case anymore. The dollar is not convertible in gold anymore. So we have lost a hard money standard. We got off a hard money standard whenever we got off the gold standard. The view of Bitcoin is that we should get back to a hard money standard. And if we get back to a hard money standard in the face of how much debt there is in the world, are we going to get back to a Bitcoin hard money standard or to a gold hard money standard? Either way, I believe both assets will do very well across the next few years. No investment advice. But Bitcoin aims to be the new money, the digital gold. But what's the advantage? Of course, it's having every 4 years the new supply gets cut in half. So today, 2024, 1.7% new supply a year. In 2028, 0.8% of new supply per year. In 2032, 0.4% of new supply per year, and so on. You get what I mean here. This cannot happen with commodities like gold. Why can't it happen for a commodity like gold? Because whenever gold goes up, entrepreneurs, savvy as they are, they dig out more gold. The same is true for oil. Whenever the oil prices go up, more people start digging out more oil, right? On the other hand, when the price of Bitcoin increases, the only thing that you have is the same amount of Bitcoin. Bitcoin price increases, the mining business itself becomes more ruthless, more challenging, more miners go under, but the new issue of Bitcoin is regardless of how many people mine, regardless of how many people exist mining the stuff, you will not find more stuff. It is programmed and capped at 21 million, which we should get to in about 2,140 the year, right? So the barrier on the other hand, so we can't create more Bitcoin despite the scheduled new supply in the code. We can't do any more. On the other hand, gold, the barrier to creating more gold is just more physical work and more getting it out of the ground. Pretty hard to do. The barrier to creating more new fiat money is simply no barrier. Dollar is just more debt. You create more debt. More money, fiat money, is created as trust. It's created as fiat. You borrow money, the money arrives on your account, and it is your promise to repay that gives that money value. In theory, it works. And in theory, it should have a fixed supply, but in practice, because the debt pie just keeps growing, and it's because it's always rolled over and rolled over and rolled over, companies, governments, states just roll over their debt. In reality, you end up with a stock of money that can only go up in the supply. The money stock only goes up, it never decreases, because we never find it to be a good idea to stop economic growth and to enter in a depression for 50 years to get back the value of the dollar to what it was 50 years ago. That is why I believe in the hard money standard. It is essential to a thesis in MicroStrategy. So let's talk about MicroStrategy itself. Why not buy an ETF? Well, there's a minor reason and a major reason. The minor reason is that ETF charge fees, and those fees, they cost you money. So over time, owning Bitcoin for an ETF, no financial advice, but owning Bitcoin for an ETF, over time, you will be leaking that Bitcoin. The Bitcoin pie will decrease. MicroStrategy, on the other hand, they generate a cash flow yield. Right now, it's a very minor point because the company's gotten so large in terms of the Bitcoin that it's mostly a Bitcoin story now, but they still have a software business that generates a yield, and that yield is spent on Bitcoin, or rather on interest, to pay the convertible that was contracted to buy more Bitcoin. But there is one thing more important that MicroStrategy does that an ETF doesn't do, and that most individuals can do, is the idea that MicroStrategy is actively shorting the US dollar and buying Bitcoin with that US dollar that it borrowed with it. And this is very similar to making the calculation of, I'm going to get into a 30-year mortgage. And because I think, my payment, I think in 25 years, my payment will be next to nothing. So I'm just going to borrow money that I have to pay off for the next 30 years. I'm just going to borrow it today and buy the house today while it's cheap. And then in 30 years, it will probably look like a very small payment. MicroStrategy does that on a much higher scale, at the company scale. The idea is you borrow dollars today, you buy Bitcoin today, and you pay off those dollars, right? That debt that you issued, you pay it off later down the line via dilution. You pay it off via dilution. This is the example that I have. The dilution so far this year has been technically zero because the debt has not converted yet. But assuming all debt converts, when that debt converts, and you can see the last debt that converts is going to be in 2032. Now, when you convert your debt into shares, the money is not owned anymore. You have the shares instead, right? So Assuming all of that dilution, that will be 10% of dilution when they all convert many years down the road. Yet, doing that, diluting by 10% the stock, meant that you increased the Bitcoin pie by 29%, by 29%. And I am sure one of the patterns of MicroStrategy, I'm not sure, but I think, I think one of the patterns of MicroStrategy is going to be every time a convertible debt converts into shares, you might have some volatility around the stock. So in 25, in 27, in 2030, 31, 32, you might have some volatility on the stock whenever the debt actually converts into shares, but that might be short-lived anyways. The strategy is so simple. You borrow dollars today, you buy Bitcoin today, you pay off the money that you borrowed later, years later, via dilution. And of course, that dilution is built in upside for the lender. So an individual cannot do that. An individual can't do what MicroStrategy does. We can't go in the capital markets, borrow $1 billion at 0.75% to buy Bitcoin. We can tap the markets, quote unquote, the banks, to buy a house. That we can do, but we can't borrow $1 billion to buy Bitcoin. MicroStrategy can do that, so it is trading at a premium for that reason. And we can't set up financial instruments with capped upside for financial institutions, because these convertible bonds, they're very valuable for these financial institutions, because if Bitcoin doesn't work out, well, you have a bankruptcy risk. You risk losing the bond, but you also, if Bitcoin kind of stays stuck in the middle, MicroStrategy still owes those bonds back. Those bonds still need to be repaid if the price of the shares in the convertible, if the price of those shares does not exceed the price of MicroStrategy shares, right? You would not convert if MicroStrategy is trading at 100 and your convertible debt is at a $200 a share conversion rate, nobody would convert. Those lenders would not convert. They would decide that they want the cash instead. So there is a capped upside, but with a very major downside protection in the form that you have a debt instrument, which is much higher in the capital structure. There's also companies that can only invest in bonds. Also, companies, why would a company want to invest into a Bitcoin treasury and not into, say, stocks? That could be an interesting point. Why did MicroStrategy decide to buy, say, Bitcoin instead of buying the NASDAQ? And the answer to that question is because companies, there's a pretty understandable process to holding commodities. In fact, we have some companies that own gold, for example, like Palantir. You have a real estate company that own a bunch of real estate. But buying the stocks of other companies when you are an operating company is a pretty complex and rule-intensive thing to do. That's why most companies cannot do this, right? The Microsoft of the world, it's difficult for them to go ahead and just buy the S&P 500. That difficulty does not exist, or to a lesser extent, when you go buy gold or go buy real estate, and especially when you go buy Bitcoin. And so that is what MicroStrategy is doing. They are buying Bitcoin. Noteworthy, speaking of, ladders and layered strategies, I could also see a world where a lot of corporate treasuries of other corporations just end up buying MicroStrategy convertible debt as opposed to buying Bitcoin. Because you're not buying Bitcoin, you're buying debt from a Bitcoin strategy company. And so that's also a possibility. For example, Microsoft, when people say, should Microsoft adopt Bitcoin? Pretty tough to know, pretty tough to tell if that would ever be a thing, but perhaps would be much easier to say, how about Microsoft owning debt, convertible debt in companies that buy Bitcoin? That could be MicroStrategy, that could be Semler Scientific, that could be one of the bigger Bitcoin miners out there. What is likely the future of strategy, in my view, my long-term thesis? It's a Bitcoin bank. I view it as a Bitcoin bank. In their capital structure, they may issue many more convertible bonds. That's just one type of instruments that they can issue, by the way, but they could issue all sorts of financial instruments, debt instruments that could be purchased by all sorts of other companies, other financial institutions of any kind. And Of course, if Bitcoin keeps going up, and this is the crazier part, they could simply do an at-the-market offering, sell shares at peak prices and just moving it into Bitcoin, creating via this a virtuous cycle. You would create a virtuous cycle because if they buy Bitcoin, Bitcoin goes up. If Bitcoin goes up, MicroStrategy sentiment improves, MicroStrategy tangible value improves, which leads the price of MicroStrategy to go up again, which allows them to issue more debt again. It brings them up in the indices. There's a lot of things to say about the virtuous cycle that MicroStrategy can possibly create, that the Bitcoin on the MicroStrategy balance sheet can possibly create. Down the road, I believe MicroStrategy will be a Bitcoin bank. They will do things like lend Bitcoin to people, to traders, for example, to other banks, to people who want to short it. You can lend it. I believe they will be able to wrap the Bitcoin into tokens, and the tokens can be used on all sorts of other blockchains, such as Solana, Ethereum, all sorts of layer one. I believe they'll be able to borrow dollars against their Bitcoin. They've already done that in the past with Galaxy Holdings. They can do it again. Just pledge your Bitcoin to another company and borrow dollars to buy more Bitcoin. They can lend the Bitcoin straight to venture capital, to who knows the type of companies we're going to see in the future. Maybe we're going to have AIs, for example, that are willing to borrow Bitcoin from a Bitcoin bank. And so if you were to actually lend the Bitcoin and give up your keys to the Bitcoin, you would not lend that at 3%. You would have exorbitant interest rates to lend Bitcoin, likely something like 20%, perhaps more than 20% to lend the Bitcoin on a yearly basis. You could also lend the Bitcoin to too big to fail banks, and maybe, who knows, maybe one day governments, right? Today, it's small governments that we know of. We know Bhutan, we know Salvador, but who knows how big this is going to be? Who knows if central banks are going to adopt the asset? So in conclusion, what am I doing? Well, I'm definitely not buying at this price. I was buying much lower than that. I've been covering this stock for a while. My portfolio is now heavily skewed for MicroStrategy, so I'm not buying. It's just what I'm doing. That's just what I'm doing. No financial advice. Knowing my personality, though, I could see this stock have major pullbacks, and I could see me not even noticing. I do now with the channel because I get the comments, but I could see me barely noticing a 15% drop, and this is kind of my approach to this. It's, to me, I'm so long term that the movement, they annoy you, they annoy me, but it's like I try to remove myself. It's not like, this is an important point, right? It's not like I bought the stock on margin or anything, right? If you buy the stock on margin, then you gotta worry about things like a 15% movement, right? If you buy a lot of out-of-the-money options, then you gotta worry about major movements. But if you own the stock outright, to me, it's a long-term hold. I sleep very well at night. My plan remains right now, it remains to keep the shares and borrow against them Sunday, like most of the stock that I own. If I ask you about, Tesla or many of the companies I own, my plan is eventually just borrow against them. That's the plan. If I were to consider selling, though, which I'm not, but if I were, I would want the following catalysts to have passed. And this is the catalyst. These are the catalysts I'm looking at. Right now, 255, we're above the level they need to be at the end of November to be included in the NASDAQ. If they trade at this level by the end of November, they will be included in the NASDAQ. That could mean another major price increase. Well, I have no financial advice. I don't know. But it would mean a perpetual bid. It would mean that you would have new buyers of MicroStrategy coming in. Typically, when you join a major indices, typically it's a virtuous cycle. That could accelerate that virtuous cycle if they were to trade at this level in just about a month. In Q1, they will adopt fair value accounting, which means that they should announce huge earnings, huge gap earnings. And I don't know if the market will be smart enough in its reaction to actually peel back the onion and look at the layers and look at the fact that this accounting gain, it was always there in the first place. Some people don't go past the gap accounting. And if you don't go past the gap accounting, I anticipate a lot of people are going to be surprised, right? We have the US election, potential catalyst coming up. We have the halving cycle that just started, a lot of positivity. And we have a lot of options that are about to expire, that are well in the money, well in profit. And I suspect a lot of people are not going to be interested in paying taxes on these options. And what do you do when you own a call option? When you own Leaps and you don't want to pay taxes, what do? You buy it. You call the shares. You say, I'm going to buy the shares. And so if a lot of people call their shares, what's that going to do to the stock price, right? A lot of shares will have to actually change hands, and perhaps at a higher level than this. So I have no idea where it's going to go. It could totally drop by a lot. It's done it before. It could do it again. But this is just what I'm doing. And with my personality, I know I won't panic. But, I look at it as a temporary number for now. And it's really the big picture. It's really, where are we going to be in 2035, 2040? That matters to me, not 2024. And I think a lot of the investors on my channel have this very long-term mindset. So anyways, this was not financial advice, not investment advice, just entertainment. Hoping you were entertained. Please like, please subscribe, follow me on X, follow me on Patreon. Thanks for watching and have a wonderful day.